Hi friends, Simit here from InformedTrades.com. Today is Friday, August 8th, 2014. Time for our daily Forex chart review. Basically in these sessions each day I share the trades I'm placing, adjustments to existing positions that I have on the markets. These are live trades verified by myfxbook.com, a trade verification service. All my trades are also posted on InformedTrades.com on my blog there, as well as you can see my whole trade history. You can sort of learn from my mistakes, learn from my successes. We can all learn together. If what I'm presenting is unfamiliar to you, you want to refresh or want to learn other styles of trading other markets, check out InformedTrades.com. We have a huge archive of educational material there, all designed to help traders learn together, trade together. Okay, let's take a look at the charts. As is customary, we'll start with a chart of gold. Interesting candlestick developments, interesting price action we're seeing on gold right here. Today's candle looks like a inverted hammer, and it's occurring at the 200 exponential moving average. So this, I would interpret this as a bearish sign. We may come back down to 1296, 1290. That's sort of the way it looks to me now. So we could expect a 1% drop in the near term is sort of the way I see it. Of course, in terms of the bigger picture, we're still in that range between 1270 and 1330. July has now ended. There were a lot of cycle analysts were expecting gold to bottom in July. If that's the case, we should be heading higher. In my opinion, I'm bullish on gold for the long term. I think we're going to go beyond the 2011 highs, which was around 1920. Right now we're at 1310. So I think there's considerable room to go, and now is a great time to acquire if you are willing to hold for the long term. So that's sort of my perspective. Near term, I think we may see a little bit of a dip back down 1300 based on the way the price reacted upon hitting the 200 exponential moving average. Okay, moving on to Bitcoin. 567 is confirmed as support here. We now have a little bit of a pattern of higher lows in place. This low at 567 here, and this candle here from August 6th looks like it could be a near-term low. The next thing to do is clear the 50 simple moving average of 607 and 635, which I think could be a pretty significant resistance level that brings out some shorts. I got long right around here, 522. I'm holding out for a considerable gain, 10 times gain I'd like to see, and I'm willing to risk the small amount of capital entirely that I put in. I am in the money though at this point, so that's nice. About 10% up, but still have a long way to go in terms of what I'm looking to get out of Bitcoin. Okay, so that's those two. Now for the currency trades that I have on, only have 2 trades on at the moment. Definitely the past few weeks have been a little rough. I'm now slightly below break even for the year, fraction of a percent. Okay, and what's especially okay, so let's look at Euro Kiwi. This position is currently slightly in the money, basically at break even. Let's call it break even. I entered at this black line. I am expecting this long wick candle here, August 6th, to act as a bearish checkmate, meaning I don't think the high of this candle will be breached. If it is, chances are this trade is wrong and I will get stopped out. I probably could have gotten away with a tighter stop, but this last time I had a tighter stop, it didn't work out too well for me, so perhaps I was thinking a little too much on recent activity. But anyway, this should be a bearish checkmate. That's sort of the outlook that I have at this point. I would like to see price action head down, of course. Target profits all the way down here. I'm a little concerned by the strength of today's candle. That doesn't seem like a good sign to me. But so long as this high isn't breached, I think the trade logic has some merit. We're also this candlestick is also occurring at a resistance level in the context of a downtrend, right? We see a pattern of higher lows in place. So the fact that we're at a resistance level, we pull back to a resistance level, we see this reversal candlestick, that's what leads me to think that now may be a time for the primary downtrend to resume. Euro Canada, there must have been some news that came out of Euro Canada or out of the Canadian dollar because it rallied incredibly here. Let's actually take a look at the 15-minute chart there. And whenever you see something like this, it's all kind of normal, and then boom, this. Usually there's a news event and the market is reacting to that. That's when we see this. You may even be able to see it on like the 3-minute chart. Yeah, right. So it's all just sort of regular, and then within one single 3-minute period, it goes from 46. Where do we open at? It goes from 46.15 around 46.15. Actually, let's get exact numbers here. It goes from open of 46.15 to a high of 46.81. So we are talking 66 pips there, I believe. Yeah, 66 pips in 3 minutes. So that's pretty impressive. Sometimes we don't see those types of move or that much range in a day. Here we saw it in 3 minutes. Usually it's a news event that does that. So that's not looking too good for my Euro Canada trade, which is now very close to hitting my stop. So we'll see. At this point, the trade's on. I'm not going to tinker around with it. It's almost at my stop. It's very close. Chances are by the time this video is done, I may hit the stop. It's only a few pips away. So that's not encouraging. That's not fun, but that's part of trading. News events sort of hit me there. I think the logic, though, the technical logic before that was compelling. And that raised the question, we've talked about this before, of whether traders should consider news events, look at the calendar, bear in mind what could have a news breakout. I don't like to do that. I think it could work either way. Sometimes it works in your favor, sometimes it doesn't. I'll still be sticking to a technical approach. And the pattern, I think, just to illustrate here, the pattern, I think, was valid. We have a channel downtrend. We pulled back to the top of the channel. We saw some narrow candles here and a little bit of a range, which I interpret as a distribution pattern. Also, we had the 50 simple moving average here. So we're in a channel. We pulled back to resistance at the top of the channel. We see a little bit of a range forming that could be distribution. We have the 50 simple moving average there. That's also doubling as support. I thought it would be a good time to short. Then a news event came out that sort of spoiled that idea. Okay, so that's Euro. We looked at Euro Kiwi, right? Yeah, that's here. Strong up candle today, but we still have that bearish checkmate from a couple days ago. Euro Canada, now close to stopping me out, unfortunately. A new order I put on today. This hasn't yet been filled, and I don't know if it will get filled. Let's see. Right now I am 15 pips away, although dollar Singapore trades in a very narrow ranges, so 15 pips here is more meaningful than it may be on many other bears. Clear long wick candlesticks. So that always, whenever I see a long wick, that always raises my attention a little bit. And then to see this occurring at a resistance level in the context of a downtrend, right? We have a pattern of lower highs, right? This swing high is lower than this one. And it looks like this swing high will be lower than this one. This is also, if we measure from this swing high down to this swing low, we have a 61.8 pullback. So at a 61.8 Fibonacci retracement, we're seeing a long wick. This resistance level was also established here, June 18th, and one could argue here, April 14th. And we're seeing a long wick. So basically, these are a number of signs. I thought it'd be a good time to short. I entered the short order at 25.32, stop at 25.68. Target profit of 23.61, which is this previous low that we had here. I could probably even target a lower one, a lower level, if we did an AB equals CD pattern. But I'm keeping it simple. And also, I would really like to get a win soon. Of course, you take your wins and losses when they come, but having a few straight losses, 4 straight losses, I think, that definitely makes it a desire to get the win back. And the thing is, with my trading approach, where I'm routinely getting 3-to-1, 4-to-1, 5-to-1 even reward risk setups, one trade can wipe out all those losses. Now, of course, we don't just want to wipe out the losses, we want to be in the positive. But the encouraging sign about that is when you have a string of losses, it doesn't take much if you're managing your risk properly and you have good reward risk setups to get back on track. So anyway, with this trade here, that's the basic logic. Long wick candlestick at a resistance level in the context of a downtrend at the 50 simple moving average with a 61.8 pullback in the downtrend. That's about it for that trade. That hasn't been filled yet. Let's see how that plays out. And that's also it for my trading in general for this week. Any questions you have, anything you want to add, join us at InformedTrades.com. Best of luck in your trading, and we might have a video this week over the weekend. I think we will, but maybe we will. If not, we'll definitely see you on Monday. Take care.